here, Nico. Yeah, someone just said at 500,000 is cheap. It is, because I think it's going to 2 million. In today's dollars, 2 million. You could say, damn, I missed Bitcoin going from 1,000 to 30,000. But guess what? It can still go from 30,000 to 1.5 million. And it's BlackRock endorsing a Bitcoin ETF essentially throws out their ESG narrative against Bitcoin. And in fact, did you guys see the MIT study that showed how valuable Bitcoin is?
Bitcoin has been criticized for its environmental impact, but a new study from MIT shows that Bitcoin mining is actually good for the environment. And now, BlackRock, the world's largest asset manager, is endorsing a Bitcoin ETF. This is a major turning point for Bitcoin, and it shows that even the most traditional investors are starting to see the value of this digital asset. In this video, we'll discuss why BlackRock's endorsement of Bitcoin is such a big deal, and what it means for the future of this asset class. We'll also take a look at the MIT study that shows how Bitcoin mining is good for the environment. If you're interested in learning more about Bitcoin and why it's the ESG-friendly asset that BlackRock is betting on, then this video is for you. Bitcoin has been a polarizing topic since its inception. Some people see it as the future of money, while others see it as a scam. But one thing is for sure, Bitcoin is not going away. In fact, Bitcoin is gaining more and more legitimacy by the day. And now, BlackRock, the world's largest asset manager, is endorsing a Bitcoin ETF. This is a major turning point for Bitcoin, and it shows that even the most traditional investors are starting to see the value of this digital asset. But why is BlackRock endorsing Bitcoin? And what does this mean for the future of Bitcoin? In this video, we'll discuss the following: why BlackRock's endorsement of Bitcoin is such a big deal, how Bitcoin will go to $2 million, how Bitcoin mining is good for the environment. If you're interested in learning more about Bitcoin and why it's the ESG-friendly asset that BlackRock is betting on, then this video is for you.
BlackRock endorsing a Bitcoin ETF essentially throws out their ESG narrative against Bitcoin. And in fact, did you guys see the MIT study that showed how valuable Bitcoin is to the environment, actually? Bitcoin mining, rather. So I think that the BlackRock endorsement of a Bitcoin ETF doesn't mean they have abandoned ESG. It just means that they don't believe Bitcoin is ESG unfriendly. I don't know. I never thought it was ESG unfriendly. A lot of New York Times and Greenpeace knuckleheads think it is, but it isn't, because they haven't done the work. Money laundering. Okay, come on, guys. Let's remember what the biggest currency in money laundering is in the world, and I'll leave it there. Over to you, James. 100% agree that it should come, the allocation should come from the bond portfolio. It won't replace bonds, right? I mean, it's the world's largest asset class. You know that. I just want to make sure viewers understand. Let's play some mathematics, okay? If total global financial debt is 400 trillion, and 1% of that debt got allocated to Bitcoin, that's 4 trillion of allocation, which is 4 times the size, about 8 times the size of the current market of Bitcoin. That's 1% of the allocation of the total global debt. Wow, this is why the numbers are so asymmetric, okay? And
yeah, remember we've talked about it before. There's only a handful of funds who control $30 trillion of assets, right? And BlackRock is one of them, right? So you've got BlackRock, Vanguard, UBS, Fidelity, and I think State Street, Morgan Stanley are kind of like right on top of each other, but that's $30 trillion of assets right there between them. So BlackRock gets on board, Fidelity gets on board, State Street gets on board. When they allocate separately to this, it behooves everybody to. You can't have your neighbor portfolio manager. Look, hedge funds all talk to each other. That's why it's so difficult for hedge funds to make money these days. It's because they're all in the same trades. You know, they're all on top of each other. And so when you have asset managers that are so big that are getting into it on the front end here, then you have not just the asset managers looking at it as a separate allocation, but then you also have the treasuries of these large corporations looking at it. And whether it's Microsoft or it's Apple or whoever, they can't deny it anymore. They're going to have to consider it. And once they start considering it, they're going to have to consider it, in their own terms and ignore all the nonsense and the noise from the media and dig into it as a separate asset allocation themselves, because it's that important to them to protect their own capital. And that's what's important here.
Bitcoin has to attain a certain market cap in order for it to be able to be invested in by the biggest funds in the world. Okay, because if Bitcoin is a micro cap asset, the biggest funds in the world can't put even 1% of their asset base into it without absolutely causing that price to skyrocket. Nor would they want to put even less than 1% in, because you probably don't allocate an analyst's time to this asset class if you're going to put less than a 1% allocation. So, I'm not sure if you guys know who Worth is. He's WORTH on Twitter. I can't remember what his handle is, but he used to be he's from Arkansas, portfolio manager, lots of years in the market like me, long, short equity guy. Alex Stancic, this is my second shameless plug for Alex, I think, on your podcast here. Stancic says to me, he goes, Foss, what do you think the market cap of Bitcoin needs to be in order for it to get really big money involved? And I said somewhere around where we are right now, 500 billion to up to 4 trillion. Like once it reaches 4 trillion, all of the biggest accounts in the world can get an allocation without materially changing the price, or more importantly, they can get an analyst's time in there to analyze this investment. My answer was between half a trillion and 4 trillion. Worth answered with a number, if I'm not mistaken, which was 5 trillion. And so there's two opinions of people who think that you need to attain a certain market size in order for the biggest money in the world to get a proper allocation to it for liquidity and analyst time. And then once they get that allocation, they tell 2 friends, and so on, and so on. And all of a sudden, Bitcoin becomes a standard holding in all of the portfolios around the world, which allows it to go from less than 1% of total global financial assets, right? We're actually at less than 1/10 of 1% right now. It can go from 1/10 of 1% of total global financial assets up to 5%. That's a 50 bagger. Easily. Now you can say, damn, I missed Bitcoin going from 1,000 to 30,000. But guess what? It can still go from 30,000 to 1.5 million. And it's the same 30 bagger. In fact, no, that's a 50 bagger. So it's because the market grows, and it's the law of big numbers. And when the market gets big enough for the big money to get in, you can see the same types of returns as you saw when it was a micro cap. So I'm not that concerned that the biggest returns are behind us. What I may say is the volatility will decrease, but I don't think the price appreciation opportunity has decreased at all. But yeah, maybe the volatility has decreased, so that even brings more money into the fold. I don't know. Bitcoin doesn't care. At the end of the day, it's still so stupid cheap. I'm not going to argue whether the last cycle was cut short or anything like that, because we're dealing with rounding errors here, Nico. Yeah, someone just said at 500,000 is cheap. It is, because I think it's going to 2 million. In today's dollars, 2 million. Am I right? I don't know. But if I much higher certainty than the market odds are giving me right now that I'm going to be right. So, yeah, you can get those returns, and that's 50 billion. Why? Because in Canada, where we're 1/10 the size of the USA, 5 billion flowed into the market. Math, 50 billion.